Hobart, Launceston, Devonport. Tassie has 3 completely different property markets, and most investors have no idea which one actually suits their strategy. I've just timed all 3 of them, and the winner might actually surprise you. I'm Oliver from Insight 2, and I've driven 800 kilometers across Tassie over the past couple of days, walked through the hilly suburbs of Tassie and run the numbers on each city. This isn't about which city is the best, it's about which one is best for your investment goals. Simple. Here's how we're doing this. 5 rounds: price, yield, growth, economic drivers and risk. Each city, I'll tell you exactly which investor profile suits each market. Let's go. Jumbo oysters. Hobart, the median price sits around 768,000, with buying opportunities generally starting from about 650k for a 3-bedroom older home in the inner suburbs. Launceston, we're looking at your median price around that roughly 550 entry point, with solid options from 500k for a quality 4-bedroom home in good suburbs. Devonport, homes typically range around at 450 to 480 rising. You can find 4-bedroom homes, solid homes from 400 onwards in most of the suburbs. On pure entry price, Devonport easily wins. You're getting a solid 4-bedroom house for what a 2-bed unit would potentially cost in Melbourne. Launceston sits in the middle, still affordable by mainland standards. Hobart's a premium play at 768 median price, and that's really getting close to Melbourne territory. So round 1 winner, Devonport. Not only do we scout streets, the good, the bad pockets, we have a luxury to go across and taste food. Let's face it, food, cafes, local spots are one of the greatest activation points to bring local community and people in. So what we have here is the good old classic Tassie scallop pie with a hint of curry in there. Is it worth it? Let's go. It has a nice hint of cream and curry powder to it. Sweeter curry. I think balances quite well with the scallop. Scallops still full apart. I've just had a bite in one. Well cooked, not overcooked, not rubbery. So yeah, is it worth it? Taste wise, 6 out of 10. Hobart gross yield sits at around 3.6% with a median weekly rent of 530 and an extremely tight 0.6 vacancy rate. Launceston offering slightly stronger returns at 4.1% gross yield. Medium rents are about 435% with a still low 0.8 vacancy rate. Devonport is a standout for cash flow, delivering a 5% plus or minus gross yield at 450 per week in a medium rent and a higher but manageable 1.2-1.5 vacancy rate. Cash flow investors, pay attention. Devonport is delivering these higher yields that is in decent leverage territory. Launceston at 4.1% is still solid, following by Hobart at 3%. The round 2 winner clearly goes to Devonport. We are down here in the heart of Launceston with Naaman from particularly which property agency do you manage across?
This Space Real Estate it's called. Yep. We're a property management first agency in East Launceston.
And you've been in the business for 15 odd years, right?
12 years, yeah.
Almost getting on to 15, right? So you've seen the roller coaster ride of what the Tassie market has done.
Yep.
Can you just give us a little bit more of some insights of what's been happening over the last year and as we head into 2026?
Definitely like a huge influx of investors. The rent prices have grown quite substantially over the last couple of years, probably more for the last 14 months mostly. Our average rent that we secure is $612 for houses at the moment on average. So it's probably spiked about $80 or $90 in the last 12 months. Huge influx of investors. You know, I've got about 110 what we call active investors in our system that we're supporting to buy a property ourselves. So we work with buyers agents. We don't look for people, but I'll help provide some on-the-ground support and advice, which is why I'm here today.
Yep.
Renting properties in about 12 to 13 days in most cases. So.
And what are you seeing in terms of renters coming in, the renter pool, the quality of renter?
Mostly interstate as well, a lot of interstate, and that's sort of, I suppose, our whole, obviously we're looking to rent to anyone, locals or interstate. How we sort of structure our whole process is very streamlined with virtual tours and a very clear and concise communication, which allows people to move over feeling comfortable in what they're getting. without having to be here and see it in person. Probably about 80% of the people renting properties at the moment I see are interstate, moving interstate, yeah, because it's more affordable.
So Hobart, around 38% growth in 5 years and a stronger long-term 10-year growth, but momentum is on the slower uptick. Launceston, the strongest recent performer with 46% over 5-year growth, strong 10-year growth, and the accelerating is in its growth momentum at the moment. Devonport, about 40% growth over 5 years. It's been a moderate 10-year growth with steady, slow momentum uptick. Here's where it gets interesting. Launceston has actually outperformed Hobart over 5 years, 46% versus 38%, and the momentum is still here. Hobart's growth has slowed as affordability bites. Devonport's been steady at 40%, but from a much lower base. Round 3 winner has to be Launceston.
You come here, you rent for a year or two, get the lay of the land, learn the suburbs, and then buy a property for a much more reasonable price than you'd find on the mainland. So just because of the national growth, Tasmania and Launceston specifically is it's growing. I think you get the most value for money. Anything sort of higher end is 700 plus, 750. Anything lower end is still a good opportunity, definitely. But I think if you're looking in other suburbs, you want to be looking for something you can add value, whether you've got a 20 grand budget to do a bit of a reno, or if you're doing like a subdivision potential, maybe a granny flat on the back, and having that in 3 years, you've got the capital, or you've had the capital growth, you can use the equity to build something that'll create some real wealth. I think if you buy in a lower end suburb, around that sort of 550, 520 mark, then you have to be careful because you can pay a premium for something that's really well done but doesn't have any value add in the next couple of years. And if the market does, and it's growing at the moment, I think it'll hold steady. Historically it does. I don't think it'll drop out the bottom. The reality is, or history shows us, that in the next sort of 12 months it'll probably plateau until the next spike. So you don't want to sort of wait 5 years for the next spike.
So there you have it, guys. All our investors out there, if you want a bit more intel, how do they reach out to you?
Instagram.
There you go. Insta folks, get onto his profile. We'll drop a link in there. So any intel, any property management advice, any good, bad, ugly pockets that you want to know a little bit more, reach out to me or reach out to Naaman, and we'll be able to bring the real value to you guys.
Absolutely. Cheers. Thank you.
Thank you.
Thanks for your time.
Hobart is driven by government, tourism and education, offering that high diversification and a lower overall risk profile. Launceston, supported by healthcare, agriculture and services, with a moderate diversification and slightly a little bit of a moderate risk too. Now, Devonport is anchored by the spirit of Tassie, port, logistics, agriculture with lower diversification and slightly somewhat of a higher risk profile. Hobart has the most diversified economy. State government provides stability, the UTAS provides education, and tourism is generally growing. Launceston is anchored by the hospital system and agricultural services. Devonport is definitely more concentrated around the port, and logistics are the main game. For me, round 4 definitely goes to Hobart. Wait. Now guys, you guys follow the Worth It series. I want to give you guys a bit of a snippet, how much work, how much effort goes into that. Drone, camera, and a beautiful drone right in front of us. And this is what it takes to bring you deep dive suburbs, to be documenting them in as we drive through into the good, the bad, the ugly, all while being safe on the road. Hobart has good liquidity, low economic risk profile, moderate environmental risk, resulting in a lower overall risk profile. And it has chilly, gusty winds down from the port. Launceston, moderate liquidity and economic risk with higher environmental risk, flood exposure leading to an overall moderate risk profile. Devonport, lower liquidity and higher economic risk paired with a moderate risk profile, giving it a higher overall risk profile. Now, risk-wise, Hobart is the safest bet. Why? Largest population, most liquid market, diversified economy. Launceston has a flood risk in specific suburbs, so you need to navigate carefully. Devonport has a greater concentration risk If a port slows down, the whole economy slowly starts feeling it. My top winner simply goes to Hobart. When in Tassie, we have oysters for breakfast. Think jumbo oysters. Let's go to the scorecard. Round 1 for price and entry simply has to be Devonport. Round 2, rental yield, singing Devonport again. Round 3, capital growth, shifting down to Launceston. Round 4, economic drivers, shifting down south to Hobart. Round 5, risk assessment, staying put into Hobart. Hobart lifestyle, you can't go wrong. Waterfront, views, dining, culture, walkability, strong lifestyle branding. Launceston lifestyle, let's look at family friendly, less congestion, wide regions and outdoor access. Devonport lifestyle, coastal, port living, slower pace, practical, not aspirational, and that matters for long-term stability. If you want stability and you're prepared to sacrifice yield for security, Hobart is your market. It's best for capital preservation in the longer term holds. Launceston, if you want the best balance of value, yield and growth, I personally think that is a sweet spot. Best for your buy and hold investors who want upside without overpaying. If cash flow is a priority and you can accept somewhat of a higher risk, Devonport definitely delivers on your yield that actually makes sense. Best for cash flow focused investors with a long-term horizon. Now, all 3 cities, as you've seen, are 3 different winners depending on the strategy, and that matters for the long-term capital stability. So if you're still not sure which Tassie city suits your strategy, you guys know what to do. Jump on a call, let's have a chat, we'll help you figure it out. The link is in the description. And of course, if you have enjoyed this, if you've enjoyed looking at Tassie on your screens from a property investor's perspective, you guys know what to do. Drop us a like, give us a share, give us a subscribe, because it really allows us to keep hopping on the plane, going into the streets, the good, the bad, the ugly, to really bring it back to you on screen.